How to consistently grow a small account. My name is Don Kaufman. You are watching a TheoTrade presentation. A few, as I say, informalities up front. This is a risk disclosure. We are not financial advisors nor a broker-dealer. I did spend about 15 years in the brokerage world. Nevertheless, I'm out. I'm out of the contest. All right. With that copyright disclaimer, this is ours. This is not yours. I also want you guys to know right up front, if you need to contact myself or anyone here at TheoTrade after this evening, it's right here, support@theotrade.com. By the way, we use a common inbox. So if you ever need to get a hold of me, and by the way, we answer emails here, okay? Get a hold of me right there, okay? Right there, support@theotrade.com. And just put Don in the heading. You can also give us a call. And we are located right here in Scottsdale, Arizona. All right, let's really get off and rolling very early on tonight. Look, this is why you're here. You know, I want everybody, when you were leaving a webcast like this, to have really, if you will, definitive kind of takeaways. I want you to be able to walk away with the following knowledge and be able to execute upon this. So the first thing is why traders and investors, alike outright fail with many of the strategies they embark upon. So I'm actually going to show you a strategy this evening that is, well, I'll just, preface the discussion with it's all kinds of wrong, right? Number two over here, why you need to be cutting risk in order to produce consistent 55% returns, okay, with very high probability movements. And it's actually going to be very minimal movements in a stock, an ETF, in an index. Number three, learn to grow an account with high degrees of consistency, okay? Even in a world, I always say, you're one tweet away from a massive market move in either direction, if you will. But how can you actually function in a world gone, totally nuts, if you will, with tweets, news drops? I mean, it's rough out there right now. If you've traded, okay, going out, defining your risk, okay, having degrees of consistency are critical. And number four over here, how you can trade without having to continually monitor the positions. We're going to do a lot of work on what we term set it and forget it, with a very high probability strategy. All right. Our gift to you this evening. Stay with me until the end of this webcast this evening, and we will provide to you an SPX expected move indicator, which I will explain here momentarily. It has 3 full years of data on it. Those are weekly expected moves that I actually have hand calculated. Okay, and it's an indicator that literally change the way that we view markets. And I'm actually going to show you a screenshot of that next. Again, this is a gift provided to you. And right towards the end of this webcast this evening, I'm actually going to take you to a specific link, okay, to actually be able to grab that indicator from. If you've never seen it before, this is actually what the expected move indicator looks like. I'm just going to detail it, albeit briefly, but I am going to detail it here. Okay. The weekly expected move, okay, which is ranges. It's these little hash marks over here, these little ranges, right? Okay. They're derived from an options chain. Okay. And highlighted candles look something like this, okay, right there, right there, right there. Those highlighted candles, they're breaches of the expected move at a week's end. So what does the study help you do? It defines efficiency or lack thereof in the markets. What I'm basically saying, okay, what the study actually does, tells you when the markets are, okay, when I say efficient, it has a tremendous amount to do, okay, with option premium buying versus premium selling. But much more importantly, okay, the indicator itself, when you really kind of dig into it, it'll actually tell you when the market is hitting degrees of chaos, if you will. Okay, and we go through very large bouts of just that. Chaos, okay, has a lot to do with actually breaching the expected move. Interesting irony, okay, is that the last few weeks of trade, 4 out of the last 5 weeks have actually breached, if you will, what we term expected move. This indicator, okay, is phenomenal. I'm telling you, stay with me till the end of this webcast and we'll give you a specific link. It is the most updated version of this. It literally includes this week's expected move, which the week isn't even over yet. All right, a few housekeeping items. Tonight, what you're going to learn is a skill set. You got to pay attention, right? Pay attention during some of the course material, whatever it takes right now, okay? I'm going to fly through a huge amount of material in the next hour to hour and a half. By the way, is that okay with everybody? You know, when I say it's an hour, hour and a half, I'm going to go as long as you guys want to stay with me, okay? Stay with me because I say shut the door, turn off the Skype, the chat, whatever else is distracting you. Get rid of Facebook. Nobody ever needed that thing in the first place. Phones on silent mode. Kick out the kids. I have 3 of my own. You're welcome to them. Grandkids, get them out. The dog can stay. The dog can definitely stay. All right? You took the time to be here, okay? This is important. Focus really on being here. Now, a little bit about me. So, again, my name is Don Kaufman, and I watched order flow for 15 years. It's kind of why I'm here. A lot of people don't necessarily know what order flow is. I'm going to describe that here momentarily, but I actually grew up in and around traders. I actually started trading in the late 90s, about 3 weeks out of college is when I started trading in Chicago. But when I say I grew up around traders, I had an uncle that started a trading firm in the 1970s. That firm had actually owned over 500 seats on exchanges around the world. The firm was actually called O'Connor and Associates. Eventually, in the early 90s, they merged with the Swiss bank and it became a division of UBS. So again, I kind of grew up around that trading world. So I started trading in the late 90s, and then I went to work for a no-name company. It was a startup. It was called Thinkorswim. And at Thinkorswim, eventually I ran the education division, built the education division, and eventually we took the company public in 2007. I actually stayed on for the TD Ameritrade acquisition until 2015. And at that time at TD Ameritrade, I went on to actually run education for all of TD Ameritrade. At the time I was there were 7 million clients. But more importantly, and the reason I mentioned a little bit of background in there, I had access to the largest retail order flow in the entire industry, bar none. Okay. And when I say I had access to order flow, people don't know what order flow is. I had access to everything you did. I had access to all the trades, both retail, institutional, okay, professional traders. I had it all. We studied those trades. One of the most invaluable experiences of my life, bar none. And I got to tell you, I didn't even realize it at the time. One of the most invaluable experiences was from literally 2009 to early 2015. I had access to over 7 million accounts. And by the way, you don't just look at individual accounts. We studied using big data those accounts, and we studied what works and what doesn't. Okay. And what you're going to learn here this evening, especially the strategy I'm going to talk about this evening, it literally comes from watching billions and others' mistakes and the knowledge of what works best specifically for you, for retail traders. By the way, the word retail, it's not a naughty word. It just means you're a retail trader. You trade through, a TD Ameritrade, a Charles Schwab, you trade through an E-Trade. That's fine. So that's a little bit of my background. I've also done a bunch of TV appearances. This is actually TD Ameritrade TV. Over the summer, I was in studio there. I've done a couple of CNBC tours. Obviously, I put this one up here because it's evidently the most memorable one. It's me versus, Mr. Wonderful himself. I don't want to ruin it for you guys, but I always say this. He could not be a nicer individual. With that, let's get started. Let's actually talk a little bit about strategy. Risk, okay? Money's on the line here, okay? How you handle your risk is directly correlated to your success in the markets. Too much risk, and you're going to panic, and you're going to close positions continuously at the worst possible time. But people are rather consistent with your panic. So, by the way, I love this little graphic over here. Listen, I've looked at hundreds of thousands of accounts, and we've seen what works and what doesn't. And what doesn't gets repeated over and over again. What I start with this evening is, here's what works, okay? Success, I say, is a series of small wins. One of the things you got to realize about this business, okay? And this is important. This is not a business of trying to, smack the cover off the ball. There are absolutely unequivocally trades, okay, that you can do that can be a grand slam home run, meaning you can make a ton of capital off of one individual trade. But I'm going to tell you, okay, those that survive in this business strategize around a degree of consistency. They follow a system, okay, that has been sourced from hundreds of thousands of people like you, meaning that, okay, it doesn't matter, when somebody says, I've got me a system, it could work great for them, has been sourced, okay, against hundreds of thousands of accounts. Second point over here, you got to cut losses and use a repeatable strategy to obtain incremental returns. That's something I'm going to stress here a little bit. Incremental returns. As I said, tonight's not exactly about hitting the cover off the ball, but this is the critical stuff. This is what separates you in this business, okay? Number 3 over here, successful, okay, trading strategies exemplify the following principles of building a trade. So I'm actually going to show you something very detailed here momentarily. It's actually called Principles of Building a Trade. So I started in the professional trading arena, okay, in the late 90s, and there is a very common theme, if you will, amongst, okay, the professional trading world. And it looks something, well, like this. It's Principles of Building a Trade. When you are learning to structure a trade and you're working for some big trading firm, if you will, I mean, to this very day, okay, this is how the professional world approaches markets. It's completely turned on its side, if you will, from maybe what you guys have heard. And it goes like this: trade logic, capital allocation, directional bias. Now I'm going to explain what each of these 3 aspects mean. But this stuff is, again, you're looking at it and it's like, it's just trade logic. Like, what is that? And well, let's get down to it. Trade logic. Place strategy and trade logic first. Listen, the vast majority of people involved in the markets, they're just infatuated with market direction. What is the man on CNBC telling me to do? The irony is everybody on CNBC, they get one bullish, one bearish. They get a guy that throws a chair once in a while. Okay. Everybody's attempting to predict the next move the market's going to make. And I love Apple. How can you not love Apple? Tesla's the greatest thing ever. Okay. Listen, you got to have the right strategy. You have to have the right strategy. You have to have the right trade logic coupled with established entry and exit criteria. Okay. You do not need to be right in picking a direction, okay, in a stock or the markets in order to be profitable. This is a critical aspect. Trade logic first. The point that I'm making with this, you walk into a big trading firm that has literally billions of dollars on the line at any given moment. Do you think they sit there and they go, so, okay, Mike, what do you think that Apple's going to do today? Hell, I think it's going up. We should definitely buy it. Are you aware that the biggest firms on the street can't even trade based on market direction anymore? How many people are honestly aware of that? They can't trade on market direction. It's part of the Dodd-Frank bill. Specifically, it's part of what's called the Volcker rule in the Dodd-Frank bill. So that just blew everybody's entire mind because they're like, but my MACD, my Fibonacci, my Bollinger Band. Okay, push it all aside for just a second. It's all about strategy. It has to be about strategy. Number 2, it's got to be capital allocation. Listen, how and where you allocate capital has to be strongly considered as a viable portion of your trading methodology. Why? Listen, capital allocation actually takes precedence. It's more important than being right in the markets, because I'm going to hammer this into you. I don't care whether you're right or wrong. I promise you one thing. If you are over allocated, you're going to do what? What are you going to do if you're over allocated? You're going to panic. You're going to lose control. And you're probably going to barf up the position at the wrong time. Anybody ever done that too? Anyone? Nobody ever wants to admit that. Then directional bias. Listen, we're not anti-charts. We just recognize where you think a stock might go doesn't always mean the markets are going to agree with your sentiments. Listen, being right directionally, I want to hammer that into you. It cannot define us as investors or traders, for we may not be right often enough. One of our war cries here is duration over direction. How and where you allocate capital can define not only losses, but it can be the defining factor in your overall success or failure in the markets. Again, our war cry, duration over direction, you need to be capable of sustaining trades long enough to be profitable. Think about that, because what I'm getting into with this duration over direction, it's about strategy, but it's also about allocation, because if you're too big, again, you're going to fail from the get-go, right? I mean, do you want to be right or happy? I love that saying over there because everybody's heard that saying. My wife frequently reminds me of the famous phrase, do you want to be right or do you want to be happy? I have not applied it to my marriage, but the logic works beautifully, okay, in trade. I'll always take that stance again. You do not have to be right to be able to make money. Why? Okay, experience and watching order flow for decades has taught us some invaluable lessons. Now, we'll start with this question. Okay. And this is where I want to get everybody kind of interactive, right? Have you ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Okay. Anybody ever had that happen? You're like, oh, I can't take the pain. Can't take the pain. You're like, you sell out of the position. You're the lowest tick, not of the trading day. You're the lowest tick ever. If there's a low print that Apple's ever had, you're it. Like recently, it's like $89 and change. That's you. Okay. So why? Why did it occur? Well, we're going to come to that, right? Well, core strategy and trade logic. So today, I want to introduce you to one real world strategy you can actually start using tomorrow. And I said that from the get-go. I mean, listen, you're here tonight to learn something tangible, something you can actually take away. People go to like a million different, webinars here and there, and everybody gets hype and all this crap. Listen, this is tangible, real world stuff. Okay. First, we got to get to risk versus reward. Now, this is actually something I talk about incessantly here at TheoTrade. Because when we first learn about markets and trading, we get exposed to these ideas of risk reward, right? For example, like you go out and you risk 1 to be able to make 2. It's such a common strategic entrance to the marketplace. And the reason I want to start with this, I'm talking about strategy and I'm talking about trade logic, and I go, stop. I really want to talk about risk versus reward first, because most people come into the market, and how do I say this as eloquently as possible? From the get-go, you're damaged goods. You're just damaged goods, People are like, I can't believe he called me that. Yeah, if you're going out there to risk 1 to make 2, all right, you probably haven't looked at the probability of success on that idea. And I'm actually going to take you through it because I want you to understand by looking at risk reward, it will, again, debunk a lot of the garbage that we hear inside of the marketplace. And it's important that, there are certain things in this business that you have to, if you will, unlearn before you can actually make real strides forward. So let's go into what we call debunking risk versus reward. Following example, and here we go. All right. So we're going to go out and we're going to buy a stock. Now, buying stock ain't right for everybody. Okay, but it's free now. Did you buy that stock? Oh, yes, it was free of commissions. Listen, we're going to go out and we're literally going to buy. All right, apparently my pen doesn't like me. All right, we're going to get rid of that pen. We're switching to backups. Okay, we're going to go out and we're going to buy, okay, this particular stock. We're going to buy it at $66. Now, I'm going to turn around and I'm going to set a stop, okay, right at what? 65. And then I'm going to place a target right on the back of that thing, okay, at 68. So what am I really doing in here? So, well, I'm risking what? Approximately 1 to be able to make 2. Does that make sense? Stop right there for just 1 second, okay, and make sure that everybody kind of feels like, you get it. You're on the same page over here, right? So you put your stop order and it's $1. And I know it's a really simple example, but let's look at it. It's a prototypical risk 1 to be able to make 2 scenario. This trade could be for a day. This trade could be for a week. This trade could be for a month. I don't care. Okay. All I care about is you understand the simple context of this particular strategy. All right. So let's, shall we move onward and upward from there? Okay. So prototypical risk 1 to make 2. Great. Probabilities in your trading. Let me ask the question now, and I'll redraw this up here. What's more likely? In that scenario that I showed you a moment ago, when I say what's more likely, and again, this is, open for your interpretation, but, okay, I want to know. If you go out there and you buy that stock, okay, at 66, what's more likely, getting to 68 or getting to 65? Now forget for a second that you know anything about MACDs or Fibonacci's or Bollinger Bands, okay? In a normal volatility fluctuation, what's more likely to occur, okay? What do you think the probability of hitting the stop order is prior to hitting the target price, right? Because this is only a $1 move. This, okay, is a $2 move. What's more likely to happen? Anybody? Okay, from a probability standpoint. So that's, again, if you want to learn about strategy, you want to learn about trade logic, and you're into this stuff, okay, I stress to you, it's of critical importance to your longer duration success in understanding this business, right? Obviously, the probability of a stock going down $1 is going to be drastically higher than a probability, okay, of it going up 2. And if you think about this, and it's not often I actually go into this amount of depth, but if you think about this, okay, and you were to do, for instance, 100 different trades, like, I'll make that easier to see. After 100 different trades, okay, what do you think is going to happen? And people are like, I used a MACD, I used a Bollinger Band. Okay, you're going to have to be right so many times because you need that stock to go up 2 before it goes down that $1, or you're going to continually get stopped out and stopped out and stopped out. You want to know what the real answer to this is? Well, for that, we use options because options are probabilities. Now, time out. Maybe you never looked at an option. Maybe you never wanted to look at an option, okay? But I'm going to tell you right now. I said the O word, okay? Options. I am not here to beat you over the head that you need to trade options. I'm not here to do that. I am absolutely here to beat you over the head to tell you that if you don't look at options, I'm not telling you to trade them, but if you don't look at them, you are missing this business right now. Options are driving, okay, markets. And options can help us in determining the viability and the practicality of any given trading strategy. How? Well, let us look at what the probabilities are in the aforementioned risk 1 to make 2 trading setup to see if this is viable over the duration. What I'm going to do is this, okay? I'm going to show you a slide here momentarily. That slide, listen, people, right now, if you're a little newer to this business, how many people here have never traded an option before, okay? I don't care if you listen to this live or not, yell at your screen, okay? Yes, no. Have you ever traded or looked at options before? Yes or no? Everybody better answer. There's like 1,000 people on right now, so you better answer, okay? Because I'm going to show you a deep, dark rabbit hole, okay, from which you're going to feel there is no escape. So let's do it, okay? Probabilities exposed. I'm going to use Intel. Interestingly enough, somebody in the crowd actually picked out that I was going to use Intel. I like it. What you're looking at over here is a trading application. This trading application is called Thinkorswim. It belongs to none other than TD Ameritrade. Okay, this is, well, where I worked and what I worked on. A lot of the calculations in here, a lot to do with it over a lot of years. Now, I'm not asking you to learn everything there is to know about options tonight, but I am going to show you an interesting example. Okay, so here's Intel, the stock. All right, and when I took this screenshot, and I took it today, was trading like pretty much smack at 66 bucks. Now, the reason I did that, why did I want the stock right at $66? Because I wanted to make it fair. I wanted to make it clean. Remember our example a moment ago? All I wanted to know, okay, is you have this stock at $66. right? And let's assume that you did go out and you bought the stock, and then you set your stop at 65, right? And then you put that target on the back at what price? 68. What options can do for you? And again, I don't care whether you know what a call or a put is. I don't care. All I want you to understand right now is what's called probability of touch, because probability of touch is everything in options. See this little monkey right here and this little monkey right here? This is 65. All I want to know is this. This is called probability of touch. It's the probability of touching. Right there. You see it? What does it say? Basically 70%. Right here, what does this say? Well, this is the 68. This is the level of 68. Okay. Right there, that's 46%. Time out. Okay. What it's actually telling you, what it's telling you in this, okay, it's like a little equation. It says the probability of getting stopped out at 65, and here is the next 10 days, is 70%. The probability of hitting your target of 68 is 46%. How do you feel about your strategy now? You're like, what? Okay, listen. How many people here would have saved probably tens of thousands of dollars had somebody actually showed them probability of touching? As I said, and I started this tonight, I want you to be able to leave with something tangible this evening. Okay? In 5 minutes, we can explain what probability of touching is. And in 5 minutes, all of a sudden, you're like, oh, ho, okay? Probability of touching, people always ask, are these equations? They're deadly accurate. Okay, they're deadly accurate, but you have to look at this not over like, one trade or 10 trades. Over like 100 trades, the probabilities, they're going to work out. Okay, meaning that the probabilities, they win out. And it's pretty cool because you're like, holy crap, I got a 70% chance of getting stopped out. You don't even know the half of it. Look, risk versus reward revealed. In the aforementioned Intel example, INTC, the probability of hitting the stop, which is 65, right, was 70%. The probability of hitting the target price of 68 was 46%. So the risk one to be able to make two scenario, it's a setup for a low probability disaster. What happens to people in here is they get bled out. They hit the stop, they hit the stop, they hit the stop, they hit the stop. And you're like, I made my target. So like one in every like 3 or 4 trades, you hit the target. You're like, ooh, but you're getting slowly bled out and you don't even know it. Okay, this is actually worse. This is a setup. It's like worse than going to a slot machine. The slot machine's so good. You're like, I put in 30 quarters, and then this one time it paid out big, and then I put in another 30 quarters, and this one time it paid out big. It's horrible. And if you don't see it, okay, you're missing the picture. And by the way, again, the probabilities, the mathematics of it, this isn't just my math. This is, TD Ameritrade, this platform now, this is the biggest platform in the entire world. Hands down, bar none. There's now 12 million people using this platform and using equations like this. Most people don't even know that equation exists in there. Now, what you need to do is position your portfolio with the right trade logic. I told you I wanted to debunk some stuff first, but now let's get down and dirty. So how do you position yourself most effectively without exposing yourself to drastic risks and or low probability? Would you be interested in a trading strategy that overcomes the high probability of being stopped out? I'm actually going to nix that right off the bat, meaning that you're never going to be able to get stopped out. Okay, you want to be able to define your risk, provides a high probability of success overall. Okay, limits capital exposure, especially at a time like this where, we're all looking at the market right now, and I think that we can all agree on one thing right now. Okay, about market direction. I really think we can all agree on one thing, okay? Is this market not completely and totally, okay, insane at this point? You're like, it's okay. There's a virus and it shut down China. It's okay. It's okay. Apple shut down their stores, and now Apple warned that their profitability is not going to be what it should be this quarter. It's okay. ExxonMobil is having some very severe cash flow problems right now, which is one of the largest companies in the world. It's okay. It's okay. Boeing hasn't flown one of its planes in a year. Don't worry. It just goes on and on and on. You got to limit capital exposure, right? Everywhere you look. Germany's almost in a recession. Don't worry. So is Japan. But they're central banks. Listen, and you never need to buy or sell the stock, okay? That's what I want to do for you. I want to actually get you into a strategy, high probability, defines the risk, high probability of success, limit exposure. Limiting exposure is huge because one of these days we're going to wake up and how do I say this again eloquently? Okay. You're going to figure out what this market is really made of. Never need to buy or sell the stock. Enter the in-out spread. So in-out spreads, they're designed to limit exposure and to maximize potential, but with minimal movement in the underlying. That sentence, there's a lot going on. You'll see in a second. Yes, in-out spreads are option trades. Now, I told you earlier, like I'm not here to like jam options into you. I am going to show you some option trades because, well, first of all, okay, the options are the easiest, the fastest, the safest way to get where you want to go in this business. Okay, what's the downside? You actually have to learn something. You have to learn something, but fear not the options. Listen, option spreads are going to allow us to like really limit risks without the use of stop orders because you don't need a stop order if your risk is already limited, right? And it's just going to provide considerable upside potential. So let's get down to it. All right, let's get right down to it. In-out spreads explained. So I'm actually going to take you through a little bit of an example, okay, of some in-out spreads. Now, I'm going to give you an example, and then we'll kind of work forward from there. In this particular example, let's start with a fictitious stock. And I call every fictitious stock, let's actually use a different color over here. I call my fictitious stock stock, okay? And stock is trading at 100. I'm just going to make it an even 100. I got something better. I'll tell you what. Should we make it 200? Because there are no more $100 stocks. Let's make it 200 because everything's at least at 200 these days. Let's make it a $200 stock. All right. So it's a $200 stock. Well, in this particular case, right there is our $200 stock. Now I'm not going to trade the stock. I don't want to trade the stock. Why? Because it's a $200 stock. You ever seen a $200 stock move after earnings? You're like, oh, it's a $200 stock. Now it's 180. Oh, it's 170. Okay. Of course, that never happens today because they only go up, but that's a different story. We're going to go out in this case and we're going to use options. I'm going to start with this. We're going to buy, okay, a 199, okay, call. We're going to buy a 199 call. And we're going to say that that call is good for 1 month of time. So what's a call going to cost you? If I buy the 199 call, let's say that it costs us, okay, $3. $3, $3. So here, there's your, okay, 199 call. Now, what's a 199 call? Again, some of you are brand new to options, never had any options experience. You never wanted to have any options experience. Well, guess what? Hop on board because you're about to get some options experience. And I'm going to tell you, this is what you need to learn. Buy the 199 call. The 199 call gives you the right to buy the stock at 199. Do I want to buy the stock? No. But I have the right to buy the stock. Do I want to buy the stock? No. But what does it give me the right to do? Buy the stock at 199. So what happens if the stock went from 200 where it currently is, right? Stock's at 200. Let's say the stock soared. Could the stock go all the way up to, I don't know, 210? Of course it could. What's a 199 call worth? Minimum. With the stock trading at, let's say, 210. Anybody? Okay. Well, if you have the right to buy the stock at 199, but everybody else in the world has to pay 210, then the 199 call has to be worth at least $11. Does that make sense to everybody? Okay. It could be worth at least $11. So what's wrong with buying a 199 call? Okay. What's wrong with it? I'll tell you exactly what's wrong with it. If you buy it, okay, and the stock stays flat, you're going to lose some money. If the stock goes down, you're going to lose some money. How much money? You can lose as much as $3. I don't really want to lose $3. I don't like losing $3. I don't want to lose $3. I don't have to lose $3. That's why I'm actually going to use what's called a spread. Okay? Simultaneously to me buying the 199 call, I'm going to sell, in this case, a 201 call. The 201 call is going to be pricing for $2. Am I making the math nice and easy, nice and clean? Now, okay, that one is also good for 1 month of time. So what do I really have? Well, over here, I bought a 199 call. And then I turned around and sold a 201 call. And you go, whoa, 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 whoa. Time out. I give up. How do you sell something you never owned? Because in options, you can either buy or sell any option you want. Any option you want, you can buy or sell it. You're like, what do you mean? Well, if I buy a 199 call, it gives me the right to buy the stock at 199. But if I sell a 201 call, it gives somebody else. Who's the somebody else? I don't know and I don't care, but it gives somebody else the right to take stock from me at 201. Do I own any stock? No. Do I want to own the stock? No. Then how can I sell a 201 call? Because I have the right to buy the stock at 199. Okay? And I'll tell you what, if somebody wants to take stock from me at 201, I'll give it to them. How can I give it to them? Because I have the right to buy at 199. Listen, if I have the right to buy something at 199, if I have the right to buy something for 199, and then I'm forced to give them that stock at 201, what's the most I can possibly make? Maybe I should rephrase that. If I have the right to buy the stock at 199 and somebody forces me to give them stock at 201, what's the most I can possibly make in a $2 wide spread? Okay, I can't make more than $2. Well, how much should I pay for this little monkey? Let's actually put it down. So in this case, I buy the 199 call, and then I simultaneously sell a 201 call. I buy this for $3. I sell this for $2. What am I into the spread for? I'm into the spread for a $1 debit. Okay, that's it. I'm into the spread for a $1 debit. So what's the maximum I can lose in what this is now called a spread? The maximum I can lose is whatever I paid for the spread. I can lose $1. What's the maximum I could make? $1. Now, time out. Okay, why in the world would anybody want to be so goofy as to go out there? And people love this example, especially those of you that are engineers. You're working the mathematics right now. Why would you ever want to risk, okay, $1? All right, that's risk $1 to make $1. Why would you ever want to do that? Why would you want to risk $1 to be able to make $1? I have an answer. I'm actually going to show it to you. Listen, what can happen over the next month? What can happen over the next month? Why would I ever want to risk $1 to be able to make $1? I want you to say it out loud too. Risk $1 to make $1. Risk $1 to make $1. Why would I want to risk $1 to make $1? Give an answer. Okay. The answer goes like this. I can't exactly tell you, okay, what this stock is going to do. Hey, we're being honest here, right? Okay. Can you tell me what the stock is going to do? Because I can't tell you what the stock is going to do. Maybe the stock starts to sell off. Now, if the stock goes from all the way at 200 and it starts to fall, I'm shrinking. I don't care. Maybe the stock gets all the way down here to 195. Let me ask you something. If the stock goes to 195, am I done? Am I over with? Did I lose my $1? Did I lose my $1? Okay, no. Because I'll tell you what, the stock fell from 200 all the way down to 195. So the stock fell $5. But there's still, let's say, 3 weeks left. Okay, there's a 1 month trade. 1 month trade, 1 month trade, 1 month trade. That fell $5 in the first week. Well, guess what? Right now, I'm in pain. Yeah, until the stock can actually rally back up. All the stock has to do is get above 201. And I'm gold, Jerry, gold. The reason you want to risk 1 to be able to make 1, okay, there's an extraordinarily high probability of making the 1 versus risking the 1, meaning that the probability of you making the full $1 exceeds, okay, the probability of the loss. Now we're going to take you through some real world examples. It's all about, okay, it's all about probability. People get so infatuated with the idea of risk reward because, again, your entrance to this business is, I want to risk 1, okay, to be able to make 2, which is completely and utterly hideous. You want to go out there. In this case, we're actually going to risk 1 to be able to make 1, but the probability of us making the 1, okay, far exceeds, right, the loss. Let's move forward. In-out spreads, okay. Well, you know what? This is actually going to be, I apologize, an Intel example. I've done an example in AMD, but Intel example. Let's continue the Intel example, but rather than use, and this is the Intel example that we're using a little bit earlier, right? The same thing where, like, you know, you had the $66 stock and, you know, you set a stop at 65 and you set your target at 68 and you knew that it was flawed and it was like a 70% chance of getting stopped out. Let's get by that. Rather than buy the stock at 66, we're going to use a spread. We're going to use the spread around Intel. Well, let's get to it. And let's see how accurate this is, okay, to the example that I just gave you a moment ago. So here we go. Intel, okay, because I want to give you a real-world example, and then we're going to give a bunch of real-world examples. Intel, which is right here, is trading right smack at $66. I'm going to buy a 65 call. Let me ask you something, okay? What's 65 call? 65 call gives you the right to buy the stock at 65. Simultaneously, I'm selling a 67 call. 67 call gives somebody else the right to take stock from me at 67. So I'm buying what's called one strike in the money, selling one strike out of the money. There's a reason we call it an in-out spread. One strike in the money, one strike out of the money. Buy a call, sell a call. Buy a call, sell a call. What's the call going to cost? Well, in this particular case, let's actually get down to brass tacks over here. The call that I'm buying is going to be a 220 debit. Okay, the call that I'm selling is bringing in a $1.20 credit. Net, I'm into this spread for $1. Now, this is a real, like when I say it's a real example, this is not a trade that I've done. This is a trade like if you wanted to do right this moment, there you go. If you're bullish in Intel, but what could happen on Intel over the next month, over the next, couple of weeks? What could happen? Intel could sell off. Maybe Intel rallies. You're going to laugh. You're going to cry. But there's a much higher probability. Again, you can lose $1. And if you're going to lose $1, lose $1 with some dignity. Okay? Hey, listen, the stock, let's say it doesn't go up. Let's say the stock tanks. The stock tanks all the way back down to 50. The market tanks, okay? And the stock goes down to 50. We're deep in the red, right? So the stock goes to 50. When I say lose with some dignity, what's the most you can lose? $1. You have to love that. So in the first example, I'm saying like literally if the stock tanked all the way down to 50, you're not losing more than $1. But you know what? I've seen crazy things happen. I've actually seen the stock go all the way down, for instance, to $60, turn around and rally, okay? And all of a sudden, you're a winner. You make $1. Think about, again, the logic of this. There's a substantially higher probability of hitting the target price before, okay, losing the $1. I mean, listen, this is why you want to use these in-out spreads. First of all, it overcomes the high probability of being stopped out. Do you see me getting stopped out here? Did you stop? There's no stop in here. I don't need no stinking stop. I'm defined. Okay? $1 is my debit. There's no stop order. I don't want to hear like, can I place a stop order on that trade? What do you think this is? It has $1 debit. You go, yeah, but Don, I don't want to lose the full $1. I go, oh, so you don't want to lose $1. Maybe you should just trade smaller. You don't want to lose $1? That's the best part of the trade. Lose the $1. Sometimes, people, you're going to be wrong. All right? I still have to actually tell that to my kids once in a while. Like, sometimes you're going to be wrong. This is one of those times. So what? You lose $1. There's still a much higher probability, though, of hitting that target price, right? So overcomes high probability being stopped out. Defines your risk. Did I just hammer the defined risk part? Okay, which limits capital exposure. You never need to buy or sell the stock. Did I buy or sell stock over here? I just traded the options. Okay, provides a high probability of success. You can literally be wrong in terms of price movement, and you can still come out ahead. I mean, people, you need this in your life. Now, here's the real Intel example. So, what, you think I was just going to give you the kind of goofy example over there? No, here's the actual Intel screen right now and all the option pricing. Okay, spot on. So what are we doing in this particular case? I'm actually going to take you through a little bit more of it. In this particular case, we're buying the 65 calls. Okay, everything on this side of the screen is calls. I'm selling the 67 calls. Taken down below, look. Okay, here's the buy, here's the sell. It's done for exactly a $1 debit. That's your max risk. Now, don't get me wrong. I waited for Intel to be right at 66 because I wanted this example to be clean. I wanted it to be right at $1. I found the perfect, the quintessential setup. But you got to know that the most you can lose in this trade is $1. And that means, for those of you who don't know options, okay, and that's okay. If you don't know options, fine. You're probably better off. You have $1 of risk. However, options, they don't trade in shares. They trade in contracts. One option contract would actually cost you $100. So if you wanted to trade Intel right here, right now, this trade can be done for as little as $100. The most you could possibly lose is $100 in here. That's why we call this like, hey, this is about growing a small account. But on the flip side, people always ask me, well, what's a small account? A small account is $2,000. It's $10,000. It's $15,000. Okay. What's a large account? I don't know. Anything in seven figures. You know, really, when you start getting over $250,000, you could trade this strategy. It's fine. Okay. What's wrong with it? Right. That's what I do with my account. I mean, again, I'll be happy to show you a little bit about my account and all the different trades that are in my account. In fact, you can see everything in here. This is the live account, which I'll show you here momentarily. So that's Intel, right? But Intel, you're like, it's a gentle way, right? It's a $66 product. I know what you want to see. But in-out spreads, they're going to give you the power to trade massive stocks, massive index products with mere pennies at risk. And this is important. It's especially important right now. So, okay. What underlying do you guys want to see? Come on. What underlying do you guys want to see? You pick it. So what underlying do you want to see right now? Oh, I like it. A couple of people actually said SPX. All right. Wow. A few people, a few Teslas. I'll tell you what. I'll start with Tesla. You know why? Because I already took a screenshot of Tesla. Then we're going live. All right. So Tesla. Tesla's a big, huge, scary product. By the way, if you've never driven one of those vehicles, I strongly suggest you just order one right now, okay? You will sell every other vehicle you have ever owned. I'm only 4 months in, and I'm getting rid of everything, okay? I just want to rub it with like the diaper at night. I like it. $845 product. When I call it a product, I don't care that it's Tesla. I really don't. I've been doing this long enough. I don't care whether you trade Tesla, the SPX. I don't care whether you trade AMD. I really don't care. Because in the end, what is it? It's $845 yada, yada, yada. Okay. It's a wild, beast of an underlying. And in this case, I just tamed the beast. Because here we're going to actually buy the 840 calls and we're going to sell the 845 calls. I took the trade down below over here. This spread is going for a $2.40 debit. That's your max risk. So if you did one contract, okay, people, it's $240. Do you have any idea how much money has been lost in Tesla in the last couple of weeks? I know everybody hears about like, oh, these people are making tons in Tesla. Yeah, there's a lot of people losing in this. Why would you put that amount of risk? And I'll tell you why that there's losses, because inside of Tesla, okay, and again, there's wonderful stories of Tesla. I don't want to denote like there's not wonderful stories of Tesla. Okay. But I'll tell you why people panic. People panic in this underlying because have you looked at it on a day-to-day basis? You're like, oh, had a bad day. Oh, I'm back. Oh, had a bad day. I mean, every moment. Like, think about the anxiety of trading something like a Tesla. People, it's vicious. Okay. It's a vicious, vicious beast unto which there is no escape. Now, this is a bullish trade in Tesla. Let's switch it up a little bit. I mentioned the SPX. A lot of people said, like, Don, would you go over to the SPX? Now, the SPX, for those of you who don't know what this is the SPX, as I said, it's the mother of all products. The SPX, okay, is a $3,370 product. Yeah, you saw that right. $3,370, okay? And look how many contracts traded today. 1.6 million contracts. That's a light day, by the way. 1.6 million. It's the beast. Okay. Nothing trades more size. Now, let's say that you think that in the next, I don't know, give me a time horizon. I think in the next, let's say exactly 1 month, that the marketplace could finally sell off. Anybody believe that? Okay. In the next month, the marketplace could sell off. Now we're going to trade a $3,370 product. Okay. How much risk am I going to have? Here you go. That's a $5 wide spread for a $1.90 debit. Boom, done. Okay, that'll fill too. This thing, it'll fill. So, mark my words. The beast just got tamed. It's a $5 wide spread. What's the most you can lose in a $5 wide spread? Now, this is done with puts. This is bearish. All I'm doing is buying the 3,375 puts and selling the 3,370 puts. The whole trade is done for what? The max risk in this trade would be $190, and you're trading a $3,370 product. And that's when people go, I have to learn options? Yeah, I think it's worthwhile, don't you? Okay, especially in a marketplace where people are going to have their life savings on the line. And you better realize right now your life savings is on the line. If you have a 401k or an IRA, limit your risk. Use these spreads. Listen, I'm now going to show you some live trade examples. I'll pick up off on Tesla over here. So what I'm going to do is I'm actually going to show you, when I say live trading examples, these are trades that I've done. All the trades that I'm showing you right now, okay, have been done inside of, it's December, January, February, right? So I wanted to give you a subsection of my trading, and I just, 2.5, 3 months, I think that's viable. So this was actually a Tesla spread that I did, quite ironically, and I'll take you through this a little bit here, but here's the opening date and the closing date. That's the exact time. Now I'm on Mountain Standard Time because I'm in Scottsdale. This is every nuance of the trade. It's exactly what I paid for it, exactly the credit, right? So for every $248 I invested, I got back $340. That's a 37% return, but it's a 37% return inside of what? It's a 2-day period. Okay, so that's one of the first trades I wanted to show you there inside of Tesla. Okay, people, I trade Tesla quite a bit. I can actually show you umpteen different Tesla trades. And by the way, the screenshot that I showed you, this screenshot and this screenshot, which I'm about to show you a trade in JP Morgan, those screenshots, okay, when I say screenshots, those are just taken directly from this account statement, okay? All I did is I went 80 days back. That's 80 days back from today. And you can see everything that I did. This is my trade history, and I'm fairly active. I have 335 fills, 335 orders, 341 fills inside of the last 80 days. I'm a very active individual in this business, right? You don't have to necessarily be that active, that's fine. But when I say it's trade history, all I did was took, okay, all of those positions, profitable positions, lost positions, and I plugged them, okay, into this this presentation that I'm providing you tonight. And look, you can see pretty much everything I've traded, okay, good, bad, or indifferent. And there's butterflies in here and there's back ratios. But tonight I'm focusing exclusively on the in-out spread because it really is the bread and butter of what I do here. So in Tesla, every $248 I invested, I got back $340. By the way, this is about small accounts tonight, right? But could I have actually done 2,480? Of course I could have. I could have just amplified it. Next spread up. This is JP Morgan. Now, JP Morgan. I like to trade a little bit of the banks. Okay. I have been known to trade a bank stock from time to time. So inside of JP Morgan, again, similar time frame. Like I wanted to start in December. So I opened this December 12th, closed it January 7th. Opened it for a buck, closed it for $1.45. Every $100 I invested, I got back 145. It's 45% return, right? Onward and upward from there. Next one over here. Ooh, Alibaba. Now, okay, if you looked at the previous trades, look at this. This is a bullish trade. It's done with calls. JP Morgan is a bearish trade. It's done with puts. Alibaba is a bearish trade. It's actually done with puts. Okay, now, Alibaba, right there. I opened it on December 27th. Okay, a few days after Christmas, a little after Boxing Day. And I closed it on January 24th. Opened it, okay, for $1.20. So every $120 I invested, I got back $222, 85% return. That's a nice spread inside of Alibaba. And Alibaba has just been wild, obviously, with everything that's going on in the world right now. Here's a little bit of what our members are saying, okay? Use this strategy, double a small account, like Dylan T, who wrote in. The in-out spreads have been very helpful as I've been able to get on a hot streak and double my small account in 4 months via the use of in-out spreads. This one is it's about minimizing your risk and limiting your account exposure, okay, in the market, like Phil S, who wrote in to say, using the in-out spread, last week I locked in $1,275, okay, in some HAL put spreads. That's Halliburton. I locked in profits of $1,240 in several positions I identified. I've been averaging 7% a month for the last 4.5 months. Told you, this is about consistency. Okay, it's about real gains in there. For the last 4.5 months, profits of over $11,000, and I've never had more than 25% of my account at risk, usually much less. So here's another spread. This is the XLB. So we're starting to get a little bit more recent. Okay, so I just wanted to give you again a smattering of trades here in the XLB. I opened this one January 13th, closed it January 27th. That's a 90-cent debit for what? Well, every $90 I invested, I got back 136. Again, a reminder here. You could have done $90 invested. You could have done $180 invested. You could have done $900 invested to get back $13.60. It's a 51% return. Okay. Again, I'm not telling you, it's 1,000% return. 51% return, okay, is manageable. It's really reasonable for these types of spreads. So that's XLB. A lot of people aren't necessarily familiar with that one. It's okay. Check it out sometime. Next one, XOP. You're like, ooh, look at this. I'm trading some ETFs. These are ETFs. Why? I don't know. This is the oil and gas ETF. Here, this one I actually opened right there, January 10th. Closed it January 21st. Okay, $89 invested. I got back 139. It's a 56% return. Right? Next one up the bat. This is the QQQ. What's the QQQ? It's the NASDAQ. It's the NASDAQ. So listen, you go back through spreads. A couple of bearish spreads, another bearish spread. Okay, here's the Qs. This one's actually bearish. I like the bearish. Okay, I liked it. This one is actually opened. This is a fast trade. January 28th, closed January 31st. Every $77 I invested, I got back 101. It's a 31% return. But it's a 31% return literally in like 3 trading days. So that was a bearish spread there. And next we come to UNG. By the way, UNG, again, I wanted to give you some very recent trades. Is this one recent enough for you? That was closed today. So I opened this one January 22nd. And listen, this one is not hitting it out of the park. Some of the trades, they don't go as well. Every $44 I invested, I got back 51. That's it. It's just a 16% return. This one, okay, I paid 44 cents for it and I closed it for 51 cents. What did I do? It's kind of a bunt, but I'll take it. I want to show you a trade like what, and people always ask, like, well, what's going to happen if I have a hideous losing trade? I'm going to tell you exactly what's going to happen. You're going to lose 44 cents, or in this case, $44. You okay with that? Because I'll tell you what, I'll actually go into my account and people go, what about winning trades? What about losing trades? I'll show you every trade. I don't care. I show everything every single day. Okay, live. People trade with me every single day. You can see everything I did in XLB. You can see trades I did in Lulu. You can see QQQ. Okay, look at that. I did a lot in Lulu. Lulu and me, we have gone a few rounds before. Me and the yoga pants going at it. Okay, you name a strategy or I should say an underlying like Bank of America here. You want to see a bad trade? Okay, I'll tell you what. Inside of Bank of America, I got out of one profitably, okay, and the other one not so profitably. One of them I actually did fairly well, $1.25. The other one, 29 cents. Again, I'll show you win, lose, draw. I'm telling you, it's about probability. You do this stuff, you do it correctly, okay, you're going to be just fine. XLE, this is the XLE. It's the energy sector. The XLE, here's another very fast trade. This is a bullish trade. It's a bullish trade. Okay, February 3rd, right, to February 5th. I opened it for $1, closed it for $1.30. Every $100 I invested, I got back 131. It's a 31% return. Okay, this, I'm telling you people, this is what you need to learn. You got no time, and I get it. It's not a problem. Each and every trade that I have shown to you today was displayed live at TheoTrade. The trade results we're showing, okay, are really, this is a strategy perfect for part-timers. We're not sitting there and, I'm in, I'm out. I'm so in that I'm out. Okay, the in-out spread, it's very hands-off. It actually uses what we term set it and forget it order types. By the way, if you've never heard that term kind of set and forget, what am I really talking about? I'm talking about order types that we call GTC. That's good till canceled. Even a fraction of the time though, okay, you got to put the trades on correctly. You put the trades on correctly. Okay, I love this picture too. Just like glued to the screen over there. It's very, very hands off over here, but there's a learning curve, right? Listen, these are the characteristics of the in-out spread. I mean, the attributes of the high probability in-out spread are undeniable. You never have to buy the stock. You define your risk. The risk is limited to precisely your comfort level. You don't want to do Tesla at $240? Don't do Tesla. Do UNG. You just saw UNG trade with 44 bucks. You don't need to use a stop order. You can vary the time frames and not pay more. High probability of profit. This is a perfect spread to reduce risk of a stock portfolio. Like, you already have enough risk on. Do you really need to go out there and be like, I need to buy me some of that there Tesla? Okay? I mean, come on. I mean, that's serious. So with that, it's, again, we're showing again the tool that you need to further yourself in this business. So what's standing between you and the in-out spread? I'll tell you what, it's building the in-out spread. Do not let these options intimidate you. Listen, the spread below is being done, okay, for a 240 debit. However, the spread, though, it's akin to an absolutely massive power saw. And I can't stress that enough. I always use this same analogy, like what options are. You want to go out, you want to cut down a tree, you're going to use a handsaw? Probably not. If you're going to cut down a tree, if that's even allowed these days, but if you want to cut down a tree, probably going to use a chainsaw. I mean, a chainsaw, it's going to work, okay? But if you don't know what you're doing, you can kill yourself with a chainsaw. You can take off an arm. It's crazy, right? Options, I kind of feel the exact same thing, because options, over the years, they still get a bad rap. But I'm telling you right now, options, the same thing. It's a power tool in this business. It's the quickest, it's the fastest, it's the safest, it's the easiest way to get where you want to go in this business. Used incorrectly, though, you can hurt yourself. You got to learn to be effective with these things to create returns, all right? Again, be effective with these things to create returns. You could do in-out spreads. Again, maybe you don't have any options experience. It's fine, okay? Don't let the options intimidate you. You need these strategies for the foreseeable market future. I mean, I put this in here just so you know, like, how much risk is really out there. Okay, I'm not here to sit there and to scare anybody, but listen, how much risk do you really have in this business? You go out there, you try to trade something like Tesla. All you need is one bad day. It's not worth it. Put on a spread, define your risk. We can show you how, and we can show you when to place in-out spreads in a matter of a few hours. Okay, what we do here at TheoTrade, we create detailed recipes. Okay, detailed recipes for every strategy, including in-out spreads. I mean, I always say you wouldn't bake a cake without a recipe. You wouldn't fly an aircraft without a recipe, without some like checklist. Why do people trade without one? I mean, what I mean by like a recipe, we have recipe, okay, books, checklists for trades. Listen, this is what you need to know to successfully enter and more appropriately exit in-out spreads. Let's actually take you through. Like when I say we're, creating a little bit of a checklist, when we're going through, like, this is a pre-flight checklist. If you're going to get into an aircraft, I mean, the first thing the pilot does, okay, he doesn't sit down, turn on the keys, jam the thing into drive and just off we go. They sit down in there. They have to have at least 6 cups of coffee. They go through these checklists. I mean, the pilot, okay, you could even be an O'Hare, will walk down the stairs. Okay, it'll be 10 below. They'll be kind of shaking the engines and so forth out there. They check every nuance of that aircraft. You should do the same inside of trading. This is what criteria is really about. First, what makes a viable in-out spread candidate? Like, what kind of stocks should I seek out? What ETFs? Did you notice that I use ETFs? Okay, I have a question for you guys. Why did I use ETFs? Why did I use ETFs in a bunch of examples? I used XOP, I used XLB, I used the QQQ. Okay, why so many? I used XLE. Come on, why so many ETFs? Anybody? They're very liquid. Okay, it's one of the things. How about this? I didn't feel like dealing with earnings. What it came down to. All right? What volatility should I seek out? Oh, high volatility ain't always a good thing, but Tesla's wild. Mr. Toad's wild ride. You have to have the right volatility. What options expiration do I select? Have you guys ever looked at the option expirations? For those of you who are a little bit newer to this, look at all the option expirations. You could do this for 1 day, for 2 days, for 3 days, for 6 days, for 8 days, for 10 days, for 13 days, 15 days, set, hut, hike. I mean, look at all the expirations. We have gone to the theater of the absurd in terms of all the different expirations. You're like, which one? You have to be spot on. You have to know which options expiration to select. Okay. What should be the delta of the option I buy? You have to know what's in. Some people are like, I don't even know what delta is. It's the rate of change of the option for dollar move, increment in the stock, yada, yada, yada. Who cares? We can tell you and pinpoint the delta to buy. We can actually tell you which options do I sell against my position. How do I build the trade? Literally, how do you build the trade? Okay. What's the amount of, like the right amount of risk? We can actually teach you how to dial in precisely the amount of risk for you, depending upon the account size, depending upon your risk tolerance. Okay. That crap, it matters. Let me show you what we do here at TheoTrade. We create recipes in trading. And what a recipe, again, breaks down to, well, it's all about, in trading, it's all about answering the what ifs. What do you mean, what ifs, right? When I say the what ifs, okay, what might be a good stock, ETF or candidate for an in-out spread? What's the correct options expiration cycle? Okay, options expiration cycle to buy my in-out spread. How much capital do I commit to these in-out spreads? What, strike price options do I buy? And how many do I sell? And in growing a small account, what should my allocation be? Let me hammer that away, okay? Because tonight, it's about growing a small account. It's about consistency in trading, okay? You can't just go out there, I have a $2,000 account, lever up. You can't do that. You got to start small. You got to be progressive, okay? You got to get in there, and you have to know precisely what the allocation should be. What do we do here at TheoTrade? We have your answers. We build recipes with definitive criteria. We literally build checklists for each strategy and each unique variable you're going to encounter. What we really do, we come in there, okay, and we answer the questions. We give the right probability for my trade. How many option contracts I trade for my account size? When do I close the in-out spread? What if the stock sells off big? Like, think about it. Once you're in a trade, what if the stock goes up? What if the stock goes down? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? It's about how. It's about when. It's about why. It's about what price. That's just the beginning, though, of all the variables you're going to face while buying these in-out spreads, okay? It's about answering those variables. It's about getting in, getting out, and knowing that you're just not left in a trade and be like, yeah, this might work, okay? Listen. You can read what a spread is. You can probably even read what an in-out spread is. You might even know how to build a spread. How many people joining us tonight have actually built one of these spreads before? Okay. But what you don't have and what you do need, again, you need, TheoTrade's recipe for success. We have 20 plus years of trading experience. That's just me. I've had access to client order flow for 15 years. I've viewed and studied literally millions of trading accounts. That's what we did at TD Ameritrade. People go, well, how do you actually go about, studying millions of trading accounts? Big data. It's all about big data. We ran education for 15 years at a firm with the largest options order flow in the industry. We've seen everything. And that's what this criteria comes from. And criteria, that's your recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this trade setup, all the criteria, and when we approach the section on criteria, you follow steps to build a trade. That's what it's about, okay? Upcoming class here is Guide to Small Account Growth with In-Out Spreads. I'm actually the trade instructor. Now, this class, okay, it's available immediately, and I want to hammer that home as well. This class happens to be available immediately. It is a 4-hour class. The class slide deck that includes the entry and exit criteria, which are the checklists, are available immediately for download. Okay. The price of the class is $497. So we have the course ready. This course is highly intricate. Okay. It's detailed. If you're an absolute beginner, okay, bear with me for a moment. We're going to talk about getting you ramped up. When I say the course is highly intricate, I don't want that to intimidate you. The intricacy of the course, okay, provided such that we actually pre-recorded the course so that we could actually cut out any issues, mistakes. We cleaned it up, okay? It is ready for you. It is 4 hours. And I'll tell you what, the course is archived. You can start watching it literally this evening. You can even download it, okay? And you can have access to it on iOS and Android. So it's $497 for the course today. Now, let me actually give you some of the key points for this course. This is actually what we term the curriculum for the course. So the course actually takes you, well, learn to construct in-out spreads, easy to learn, okay? How to do, easy to place, okay? How to buy long duration options without paying more, okay? So you give yourself the gift of time. That will make a lot more sense when you actually go through the course. You're actually going to learn that an in-out spread, for those of you interested, we were asking, would you do it for 2 days? Should I do it for 5 days? Should I do it for 30 days? You're actually going to find out during the course that going out longer in time doesn't cost you more. So we're going to show you precisely the time frame. Number 3 here, how to use defined risk reward strategies so you never have to lose sleep over your positions again. Number 4, in-out spreads, they're used in any market condition. So in-out spreads, now there's great strategies for various market conditions, but the in-out spread can actually be used in any market condition. I mean, the most ideal condition would be a really volatile marketplace. Number 5, build your own in-out spread with detailed step-by-step entry and exit criteria. Step 6 over here, we're actually going to take you through in-out spreads. Easy to manage with what we term set it and forget it order types. Those are, again, okay, GTC, okay, GTC. Number 7 over here in the curriculum can be done with a trading account, okay, of $2,000. All the trades that I talked about this evening can absolutely unequivocally be done in retirement accounts. You know how I know that? Because the account that I showed you this evening happens to be none other than a IRA. It's a retirement account. I did, 335 trades inside of my retirement account in the last 80 days. Okay. The 9th portion of this class, it's capital allocation. It's position sizing. A big portion of this particular class. We don't just run through. This is a spread. This is a spread. Capital allocation is quite critical. There's a section in here on capital allocation. It's techniques, though, to grow the account. And, of course, the final step over here, follow the recipe, okay, to be able to build that trade. Now, no matter how many times I've gone out and I've talked about, TheoTrade and so forth, okay, everybody that comes here, you want a bonus. What we try to do here at TheoTrade, I think really differentiates us from any other place, okay, where in terms of trading education, okay, bar none, there's nothing even close to what we provide here at TheoTrade. The class we just showed you, $495, $400 or $500, absolutely nothing. People, you're going to lose more than $1,000 going out there and trying to trade Tesla, in one day, okay? But at TheoTrade, we go beyond one class or one indicator. I mean, we realize that people, they want everything to trade. They want everything to be able to vest. They want it at one place and they want it at one price. And that's actually exactly what we do here at TheoTrade. So we're going to provide a few bonuses this evening, okay? For those of you that are enrolling for the in-out spread course this evening. Bonus number 1, we're going to give you access to our full library, over 86 trading classes. By the way, that now, okay, has actually been bumped up because we just recently had some courses over here. This happens to now be 88 trading classes. All of the following classes that I'm showing you are now available immediately. They're on demand, meaning that the classes I'm talking about, these are downloadable. These are something you could watch literally right now. The first class, Guide to Small Account Growth with In-Out Spreads. That's what I've been talking about. It's a $497 class, okay? That's obviously included. Growing a Small Account with Black Book Spreads. This, okay, was actually Matt Williamson and I did a class, okay, just about 2 weeks ago. It's part of it. How to collect income being short, the next big short. That's actually risk twist spreads. Guide to selling high probability spreads, iron up, iron condors, selling premium, minimizing risk, survive and thrive in extreme volatility. There's a day trading NASDAQ futures course, covered calls class, essential skills for consistency in trading, top 10 skills for growing a small account, pairs trading. That's just, okay, literally, okay, the tip of the iceberg. It's over $9,000 in classes alone, all right? Literally, we give you $9,000 in classes. Why? Because it's just, you go through, you look at a curriculum like this for $497. But this, if you're new to options, okay, if you're brand new to options or brand new to trading, going to one class ain't going to do it for you. So we just provide you everything. It's everything that we've done in here. Now, these classes, I'm going to tell you right now, I didn't do 88 classes, okay? These are the TheoTrade instructors. So TheoTrade, we have Jeff Bierman. He's an analyst, trader, and a former chief technician for TD Ameritrade. Now, Jeff also is a professor of finance at Loyola in Chicago. Okay, so Jeff, by the way, if you guys have ever traded on the Thinkorswim platform, he is responsible for over half of the technical analysis studies on the Thinkorswim trading application, specifically the charts. He was the chief market technician for TD Ameritrade for 7 years. I grabbed him out of TD Ameritrade when I exited in 2015. Next in the list, Matt Williamson. He's our market neutral. He's also what we call a premium selling option strategist. So what's Matt? He's a premium selling geek. Next on the list, Corey Rosenbloom. It's our senior strategist. He's also what we call our resident swing trader. For those of you that are swing traders, okay, stocks, options, or futures, this is your guy right here. Next, Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. Now, Brandon also worked with us at TD Ameritrade. In fact, Brandon wrote the course curriculum at TD Ameritrade for a course costing, okay, it was over $24,000, and it was an 18-month-long course. Brandon actually wrote the course curriculum for that. And now he actually provides a huge amount of our curriculum here at TheoTrade along with the rest of us. Nevertheless, Brandon, unbelievable in terms of macroeconomics. I mean, if you haven't figured this out, we have 7 full-time instructors, each of us having our own genre in trading. Next in the list, Steve Slim Miller, 43-year veteran, stock options and futures trader. Slim was actually, he was down at the Chicago Board Options Exchange before they even listed puts over there. And last but not least in the list, Tony Rago. This is just NASDAQ futures. We have somebody that trades throughout the course of the day, all day. He's our intraday strategist here at TheoTrade. So that's our first bonus to you, as we give you access to it's now 88 classes from all, of the aforementioned individuals. Bonus number 2. Bonus number 2 here, well, we give you an all-access pass to TheoTrade for the next 3 months. It's literally an all-access pass, to TheoTrade. It's unlimited access to what we call TheoStream. You get access for a full 3 months. Why? Well, because we have a live trading chat room. We broadcast 6 hours per day. All the traders provide real-time trade ideas, real-time market insight, real-time analysis. That's the question I constantly get. People are like, do you guys trade in there? Not only do we trade in there, we actually do text and push notification trade ideas, including, of course, in-out spreads. We even have 5 distinct trading portfolios. By the way, we just added something brand new, specifically for in-out spreads. I also do a weekly video with an update on in-out spreads. I'll show it to you a little bit later here. We also have daily coaching sessions with timely topics and stocks, and options, and futures. And all of our instructors, including myself, directly answer your trading questions via email. So we just gave you $9,000 worth of classes. Now we're giving you access to what we think is about $997 of support, trades, and insight. And again, the support, you can email us. All right. I mean, there's places, you could do coaching. It's thousands of dollars a month. We just give it to you. We give it to you because if you want to learn this business, you got to have somebody that you can actually ask questions to. And I'm not just talking ask questions in a chat room. Email us, support@theotrade.com. Okay. After you enroll tonight, you can email us anytime. Like, hey, this is what's going on in my portfolio. And I hope you guys are not offended by this, but I'm going to tell you right now, there's times you're going to email us. You can actually email us trades and say, hey, am I doing this right? And we might look at you and say, no, that's the worst thing I've ever seen. Please, I'm begging you, don't do it. We can talk about trades. It's okay, right? So again, it's access to all of that for the next 3 months, literally for the next 3 months. In addition, in bonus number 2, we give you access to 59 proprietary indicators and scans. Auto expected move, S&P 500 gravity points, TheoTrade RSI Laguerre, Quantix, NQ levels, next generation squeeze indicator. Okay. I mean, there's a position tracker in here, IV rank versus percentile, it goes on. By the way, tonight, I'm actually going to give you here in a few moments the SPX expected move. Okay. It's access to over $1,800 in indicators and scans. I want to stress this because everybody comes to TheoTrade and they're like, what's it gonna cost me for the? We give you everything trade, everything to invest. I mean, that's what's important to us. Okay. That's why we have right now over 4,000 people a day, okay, in our trading room. Listen, TheoTrade, what we do here includes everything. Everything you need to trade, everything you need to invest. We have classes and coaching and, email access to the instructors, a live trading room with live trades, indicators and scans, mobile access. We literally have our own mobile applications for both Android and iOS. It's everything that you need to succeed in this business. I mean, what we've tried to build, okay, is TheoTrade. Well, it's the Netflix for traders. I mean, that's what we tried to build. When I say it's like the Netflix for traders, you pop into Netflix over there, you're like, well, do I want a comedy? Do I want to what genre of trading do I want? We have all the different genres of trading covered. Everything from bearish trading to swing trading, okay, to in-out spreads to day trading. It's all in there. It's at one price. It has all the indicators, all the support you're ever going to need, okay? We charge $297 for 3 months. That's it. Tonight, it's $297 for 3 months. That's going to include the high probability in-out spreads course that we've been talking about tonight. It's going to give you access now to 88 trading classes. There's also going to be new monthly classes. Listen, you're going to be with us for what? You're going to be with us for the next 3 months, right? And I'm telling you right now, in the next 3 months, yeah, we're not even giving you the schedule yet. There will be new monthly classes. We give you a live trading chat room, 6 hours a day. Now, I know that not everybody can tune in 6 hours a day every day. Some of you actually work for a living. I get it. Every ounce of every second of TheoTrade is recorded. You can play it all back. In fact, you can even play it back on a mobile device, and you can play it back at 2 or 3 times the speed, right? So if you want to catch, I do at least an hour a day of here. If you want to catch my hour and you want to do it like, in the afternoon, great. It's not going to take you an hour to watch it. It can take you a half hour to watch it. We're going to give you every indicator and every scan that we have. We don't hold anything back. 59 proprietary indicators and scans, okay? Again, emailed trade ideas? Nah, we've actually moved to text and push notification and 5 distinct trading portfolios. By the way, when I talk about distinct trading portfolios, right, I want you guys to know, I can actually pull this up for just a second. This is TheoTrade. This is what TheoTrade looks like, right? This is actually the trading chat room. We broadcast up here like a little TV screen. This is the chat room down below where you can actually communicate with any one of our instructors. You can communicate with thousands of different clientele in there. People, it's all available right in here. But as I was saying, we just added something new under the portfolios, right? This is an in-out spread trader. And it's a video that I now do each and every Friday, okay? And what I'm doing every single week on Friday, I update you with about 6 or 7 different trades. When I click on this, I want you to see what it looks like because I want you guys to know that you're going to have support here. This is the Valentine's Day update, exactly 10 minutes, okay? It takes you through, okay, Costco trades. It takes you through, again, in-out spread after in-out spread after in-out spread. So you name it, they're in there. That's what we do here at TheoTrade. And I want to stress that, right off the bat, okay? If you will go with me now, right here, TheoTrade.com/in, okay, for in-out spread, that's IN. So TheoTrade.com/IN. All of this is $297 for 3 months, okay? I want to further that. When you guys are heading over to TheoTrade.com/in, I want to further it. We're actually going to make this a completely riskless trade. And I want to explain this for just a moment. So everything is available at TheoTrade that you need to start trading from absolute novice to expert. Another aspect that I wanted to show you about TheoTrade, and I'm going to pop this back up here momentarily. So inside of TheoTrade, we have what we call Start Here. You're brand new. You're an absolute novice. You've never traded anything in your life. Forget about stocks or options. You've never traded anything. Well, Options 101. There's part 1, part 2, part 3. You can actually go through a progression here, okay? We have an entire curriculum for people to start here. And I urge you, even if you have, okay, considerable experience, go to the Start Here menu. This thing is going to be worth, okay, your time in there. So with this, as I was saying a moment ago, okay, we're going to make this a completely riskless trade. As I said, it's everything you're going to need from novice to expert. But we also give a money-back guarantee. It goes like this. Trade with us over the next 3 months. If you're not satisfied, just email us, support@theotrade.com, okay? Provide us the details of your trades, receive a full refund. Now, we're not putting anything like, crazy on there. When I say If you're not completely satisfied, if you're not satisfied, email us. I'll give you your $297 back. People, it's $297. Okay, that's not exactly going to break the bank. There are over 4,000 people now on TheoTrade. So $297. And I want to be also making something clear, okay? Because I'm going to get this question 1,000 times tonight, and I'm going to say this a couple of different times. Tonight is $297. This is not an introductory price. This is not a membership, okay? This is not a membership. You pay $297 one time. What happens after 3 months? You want to do it again? Do it again. You don't want to do it again? I'll still love you, okay? Hopefully you still love me. We part ways, okay? Listen, it's $297, okay? No more memberships. We don't do anything like that anymore. And again, we're still giving a money-back guarantee. By the way, the money-back guarantee, I'm going to give you the stipulations. You got to do 10 trades using in-out spread criteria in the next 3 months. By the way, 10 trades in 3 months is nothing. We will give you more than 10 trades in the next 3 months. Easy, right? But you have to use our criteria. Your initial account value must exceed $2,000, okay? You must follow TheoTrade criteria for in-out spreads, meaning that you can't make up your own stuff. You're like, what was that? You're like, it was a special spread. That doesn't count. And you have to provide, okay, real trades, not you that are paper trading out there. This ain't paper trading, people. If I'm willing to risk 297, you got to be willing to do the 10 trades. That's all that I'm saying in here. If I'm willing to risk 297, you got to be willing to risk, okay, a couple of bucks on these trades. Okay, that's the only stipulations. So with that, again, we're going to move forward over here. Bear with me here momentarily. All right, better. All right, so that's the only stipulations on here. Nothing more, nothing less. Listen, get into TheoTrade now. We're going to work with you directly. And I constantly stress this, okay? We have over 4,000 people on TheoTrade. And what we do is when we bring you on to TheoTrade, we really have like almost like a concierge service, if you will. We try, okay, to be able to answer each and every email and every question directly, which is one of the reasons we only have 30 spots on the TheoTrade Riskless deal. We do this, okay, because what? There's one of me, there's one Matt Williamson, there's one Tony Rago, and there's going to be thousands of you. There's 30 spots on the TheoTrade Riskless deal. And we do 30 spots on the Riskless trade deal, and we do that because we're going to have to look through all of your trades. It's a matter of trade size. We trade live, okay? It's a matter of us being able to actually go through and reconcile all of those trades. We also give you unlimited email mentoring. So as you guys come on, we only provide 30 riskless spots. So tonight, there's 30 spots open for the riskless trade deal. That is the $297 offer that's money back, okay? It's the first 30 people that sign up. We don't do this kind of stuff. It hasn't been available before, but it's $297, okay? But that $297, again, if you're not satisfied, get your money back, but you got to do 10 trades in the next 3 months. Listen, a little bit about what our members are saying. Thanks, Don. Just finished my first ever quarterly trading report, and I grossed 21% return on investment. Thanks for all the help. Looking forward to your intraday course tomorrow morning. Fantastic service. Became self-directed with my trading through the education I got here. I just want to let you know, Don, how much I appreciate him, what he does for us. The first time ever, my account's in the green. Thanks, TheoTrade. I'm up $4,000 this week. Listen, okay, TheoTrade. And I want to clarify, this is access to everything that you get tonight. So we give you the guide, okay? The guide to small account growth with in-out spreads course. The first bonus in here, we give you all access TheoTrade membership. It is a live room, 6 hours per day. And when we say we broadcast for 6 hours a day, you don't get to see my ugly mug. You're looking at my screen. You're looking at my trading screen throughout the course of the day. You'll see every single thing that we go through. Again, there's 6 to 7 of us that broadcast throughout the course of any given day. We archive everything, and all of those archives are available 24/7 on mobile application, on your iPad, okay, on your computer, whatever you want. We do text and push notification for trade ideas and portfolios that you can follow, okay? We have trading indicators and scans. We have daily coaching sessions with 10 hours of live support, okay? Our second bonus in here, we give you access to 88 classes that we already have done. There's day trading and swing trading and technical trading. And, that's technical analysis, beginner options, advanced. Okay. No matter how advanced you might think you are, I guarantee we're going to take you to the edge and beyond, right? There's so much in here. And we're also going to do new monthly classes. Now, for those of you, follow with me right to this address right now. It's, again, TheoTrade.com/IN. Okay. Follow me to this link for the SPX expected move indicator. So I'm actually going to cruise over to that site. Okay. Let's actually go to it right here, right now. And I'm going to take you in here. I'm going to walk through a couple of things, and then I'm going to answer a couple of questions. But I'm also going to show you a few aspects of what's available, okay, on TheoTrade. By the way, again, the site over here, as I pull this up, it's TheoTrade.com/IN. It's the guide to small account growth with in-out spreads class. We're actually here to help you. If you guys need us, by all means, just chat in. We're live right now. Our phone number, 800-256-8876. Again, you can also email us, not just tonight, but at any point. It's just support@theotrade.com. Now, this will actually take you through everything. Again, tonight it's $297. Now I want to reiterate something as you click add to cart in here, okay? And click add to cart. When you click that, this is not, and I've already mentioned this like 3 times, this is not a membership. We've done that in the past. We don't do it anymore. It's $297 for 3 months. Why do we do it? We're so sure that you're going to love us, okay? You sign up for another 3 months. And that's what we hope on. That's what we kind of bank on. $297 though, for the first 30 people that enroll tonight, it's a completely risk-free trade. If you're not happy with us after 3 months, if something didn't go right, you did 10 trades, you did 15 trades, you did 20 trades, show us a couple of your trades. If you're not happy, we'll give you the $297 back. Just want everybody to be aware, again, it is not a membership. Also, I wanted to give you a quick rundown of TheoTrade. Okay, again, the TheoTrade site, this is our TheoTrade live trading room where we actually stream live. We will start streaming 10 minutes before the bell goes off tomorrow. Okay, again, you can kind of read through, some of the chat room. You guys can hop in here, and please, I encourage you, hop in there tomorrow morning. Go, I'm brand new here. So what else do we have on here? As I said, we have a start here menu to take you through from novice to extreme. We have our options classes. This is the classes archive. Now, in the class archive, there are 88 different courses now available in here. And those 88 courses, they're actually broken down by genre, right? Option strategy classes, newbie classes, technical analysis, day trading, trend trading, hedging strategies. Each and every class, has an unbelievable standard to it with criteria. If you want to see what the a class looks like, here, let's actually click on option strategy classes. These are all the different option strategies: iron condors, small account options trading workshop, guide to getting short and collecting income, the risk twist spread class, how to collect income being short. Okay, it just goes on and on and on. The class that you're interested in is right here: guide to small account growth with in-out spreads. That's the class. Again, it's part of this archive. But if you want to know what a class looks like, let's actually hop over to a separate class that I've actually done. I'll actually show you what the earnings class looks like here momentarily. So, you're now in a class. You can play these. Of course, you can maximize to a full screen. And we'll actually take you through a little bit of the class. But right here is where you click to download the slide deck. And downloading the slide deck, it has all of the criteria, just a PDF file. It'll download it, open with, And when I say it'll download my entire slide deck, it literally downloads the slide deck. And I know you're looking at a white screen right now because I'm bringing up the slide deck. So this is what a full-blown course kind of looks like. And when I say step 1, step 2, this is what I mean. This is criteria, entrance criteria, right? Step 1. People are going to try to run back through this, but I'm going to scroll through it very, very quickly. But I wanted you guys to see what a class looked like. The start here menu, this is our member home. At the member home, we have like a search engine for everything on the site. So you name any strategy, any genre of trading, like implied volatility rank, volume weighted, options volume, vol futures. You put anything you want in here, just click search. It's going to find every single topic, on this site related to that. Again, we built like a Google, if you will, specifically for different trades we do over here. Now back over here again, it's guide to small account growth with in-out spreads. Again, this is TheoTrade.com/in. I also want to show you, for those of you that have waited here patiently this evening, okay, to download the SPX expected move indicator for Thinkorswim. It is right here on the bottom of this page. It's right there on the bottom of the page. Okay. I'm going to go ahead and I'm actually going to answer a few questions. I'll come back over to this in a moment. And let's actually go ahead and let's answer a few specific questions on there. As again, you guys go to TheoTrade.com/in. These are generalized questions, and then we're going to come to some very specific questions here. So bear with me as I do take you through some of these generalized questions. I think one of the first things that always comes up, people say, what do I need to get started? I just say kind of like a laptop, okay? A decent internet connection, as long as you have any internet connection. You know, a lot more people these days are now trading off of mobile, okay? I'll actually make the argument that you could do everything off of an iPad, a Chromebook, okay? Even an iPhone, it's fine, okay? Or Android, it's absolutely fine. We have everything you need to get started, from absolute novice to the most extreme traders. Second question, I want to hit, listen, this is not a membership. We do not and will not auto renew or bill you again. If you want to continue after 3 months, it's another $297. Like, that's it, right? It's $297. It's not going to, and I keep reiterating that because, listen, people lose more than $297, okay, in 5 minutes in this business. You know, you're going to find out what your money's actually worth. You guys are going to be shocked at what we offer here. And I'll tell you right now, TheoTrade is totally overwhelming. But for whatever money you spend, I don't care if whether you spend $10,000 or $297, and this is worth every bit of $10,000. I think that you would rather be overwhelmed rather than underwhelmed. And I think you would agree with that, right? Number 3 over here, TheoTrade archives everything. We get it. You can't watch everything live throughout the day. We archive everything, and it's all of that is available on our mobile devices. So you can watch it on your Android. You can watch it on your iOS. You can email us anytime. We respond within 24 hours, including trade-related questions. Okay, the reason we always say 24 hours, somebody will email us and be like, I need to get out of this spread, and there's 3 minutes to go to the closing bell, and I'm on fire. And I'm like, hey, you know, that's not fair. You got to give us more than 3 minutes. Okay, I can't sit there 24/7 with the eyes wide open. But in 24 hours, just get ahead of it. Email us, okay? Number 6 over here, you're going to gain access. You gain access to every single course that TheoTrade has done in the last 4 years. That is 88 total classes in all. Every live session, every archive is searchable. Okay, name a trading topic, and we have an archive on it. Literally name anything, and we have an archive on it. Number 7, all the trades that we've talked about tonight can be done in an IRA retirement account with as little as $2,000. If you're in Canada, you're fine. We got your back. We'll actually even tell you which of the major brokerage firms to use in Canada. We at TheoTrade can also help you get approved for options trading at major brokerages in the US. I mentioned Canada because sometimes it's a little difficult to trade up in Canada. We have it taken care of. And remember, there's only 30 riskless trade spots available. And I'll tell you right now, again, it's only $297. Like, it's not going to break the bank for you. But if you feel better knowing that it's completely riskless trade, be one of the first 30 in there. You're not happy after the next 3 months and you've done 10 trades, you can get your $297 back. Listen, get results, just take action, and roll for TheoTrade. There's no risk. Again, it's TheoTrade.com/in. All right, I'm going to answer a couple of the questions over here. By the way, I wanted to throw this up here too. A couple more of what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything, turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. It's from David. It's one of the most important things. Like, I absolutely love, okay, that particular saying over there because, you know, people go to this education, that education. It's like $500 here, $1,000 there. Listen, bar none, okay, nobody is going to have the instructors that we have here at TheoTrade in terms of the experience. Every one of our instructors has a minimum of 15 years of experience, a couple of them with a few decades out there. All right. All of us are traders first. Okay. That's the most important aspect to us. We're traders, and you're going to know it. You hop into TheoTrade literally tomorrow morning. You hop into TheoTrade or you listen to some of the archives tonight, you're going to know that we're traders right off the bat. Okay. In fact, one of the guys, Matt Williamson, Matt, trader just like you, sitting at home. Okay. Just managed enough money to actually catch my attention. Hence, we brought him on as an instructor over here. Thought it was kind of interesting. All right. The next one over here. Don's the most knowledgeable person I've ever heard in over my 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. I'm very impressed with TheoTrade. I've studied under stock coaches, various trading and strategy intellects, and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. I thank everybody that actually wrote some of these. And if you're interested, a couple of more for you. I'm going to answer a few more questions, but I'm also going to pop up the other screen over here. Again, it's theotrade.com/in. Bear with me as I once again kind of pull up that page, theotrade.com/in. Again, click add to cart. It's $297. Let me go ahead and answer a couple of the questions from the chat room right now. All right, first one came from Ken. He said, Don, do you prefer buying or selling options? Okay. Ken, totally dependent upon market conditions. However, in the present time, and I'm going to be very adamant about this, buying options unequivocally, all right? And I don't want to generalize in the whole marketplace because I'm sure that there's stocks where you could sell options, but unequivocally, buying options in the market right now is going to be more effective than selling options. And I've got every detail, every study to actually prove just that. All right, next one actually comes in from Jim. It said, so you could win both a call or put during the same time period, right? Okay, you could use both a bullish and bearish strategy, but Jim, that kind of diminishes overall probabilities and overall outcomes. Okay. All right. Next one comes in. Says, how much of your trade do you risk? I love that question. Yeah, you got to go to the class for that one. That one I can't give away because it's giving away all the mathematics in this thing. The actual risk in the trade is one of the key pieces of criteria in the trade. All right. I love this one from Thurston. Said, when do you decide to take the profit? The profit in the in-out spread, okay, is specific, okay, in terms of percentages. And again, that's another one that the course is going to detail precisely, okay, not only at what percent do you get out, but the course will actually detail how to create the order right after placing the initial trade. We can actually place an exit order to get out of the trade for either a profit and or a loss. Okay. Here's another one actually that came in. What percent of these trades are you shooting to be correct in? So that's actually a great question. When I say, what's the percentage of trades that you're shooting to be correct in? I'm not shooting to be correct in it. The trades, probably one of the most difficult things to answer tonight, but the trades, okay, even though I was doing bullish and bearish trades, the trades themselves are really not based on directional bias. In any given trade, and I'll explain it this way, the market fluctuates up and down and up and down. Any given trade, okay, the probability of profitability, and that's what we're going to call prob of profit, okay, is anywhere between 62, okay, on up to about 74%. So the probability of profitability, meaning that what is the number of outcomes that are going to be positive? It's anywhere from 62 to 74%, depending upon which criteria path you select. Now that, again, that's what this class is about, probabilities. I don't want to hear like, but I got me a MACD and it's going to make me more right. That's not what this class is about, okay? We're going to look at some charts in here. We're going to look at some good setups. But the class are much more, okay, about using probabilities in this business. It's about number of occurrences. All right. Also, what happens if you get assigned on the sell side of the trade? That's from Malcolm. So Malcolm was asking, in options, there's exercise or assignment. Malcolm, you'll never have to worry about that because the assignment would only happen if the option was deep in the money. The percentage return for the exit is going to keep you out of trouble, Malcolm, and you'll be exiting the trade well before an assignment. However, if the trade was assigned on the short side, you can then exercise your long option and you would actually be out for a full profit, meaning on a $2 wide spread, you would make the full $2. Okay, getting assigned, Malcolm, could actually be one of the greatest things that ever happened to you. Ironically, exercise or assignment is now free at most major brokerage firms. They used to cost big money. Now it's actually free. Okay. Okay. But I don't hold any of the stock, so how can I deliver the stock? Remember in my example, somebody was actually asking this a little bit earlier, okay, and I apologize for getting it now. You had a 99 call, okay, and you had a 101, a 101 call, okay? So how do you deliver stock at 101? Well, you have the right to buy it at 99, okay, and you can then deliver it to somebody at 101. So if somebody actually says, I want stock at 101, you turn around and go, well, I need stock at 99. So you buy the stock at 99 to give it to them at 101. And that's exactly how it works. All right. It's not too horrific out there. Again, if there's any more questions as we're going through over here, okay, we will gladly answer them. I'm going to grab a couple more right now. I just want to thank those of you that are currently enrolling for the 30 riskless spots. Right now we have William H. from South Carolina, James K. from Texas, Thomas S. from Illinois, Terry B. from Colorado, Adam D. from California, Ron S. from Florida, Gary I. from Texas, Melissa W. from Ohio, Greg L. from Ontario, Richard D. from Oregon, Malcolm C. from Nevada. Malcolm, hopefully I answered your question there. Alistair S. from Ohio, William V. from Wisconsin, Tony L. from Florida. Thank you guys for enrolling. And by the way, please, okay, we're talking about your first name. When you come into TheoTrade, you're going to select a nickname. By the way, you can make your nickname anything you want. There's Ray, there's Vernon, DJ. Select, by the way, Tony Ragos, obviously, and Corey Rosenbloom, one of the instructors in here. Come in tomorrow, okay? I'm there first thing in the morning. Say hello. Say, hey, I'm brand new here at TheoTrade. Most of the people in there, they're going to be our clients. They'll love it, okay? Welcome to the party. You're new, okay? And new is interesting. I also want to reiterate once again, a few people were asking about where the SPX indicator was. Again, it's right here on this page towards the bottom of the page. It's theotrade.com/IN. That's the SPX, okay, expected move indicator for Thinkorswim. It's located directly on the bottom of this. For those of you that are enrolling, you simply click add to cart over here. If you need us, okay, support at theotrade.com. I also want to reiterate this again. If you need to get a hold of me after tonight for anything, hit me at support at theotrade.com. We're here to help. Again, so somebody was asking, there's futures trading, okay? What time of the day is futures trading? So we've actually got instructors that are posting setups. Even if I am on and I'm not trading futures contracts, we have instructors posting setups throughout the course of the entire trading day. It'll take a little time, okay? You'll get used to it. So just, bear with us. Everybody needs time to acclimatize to TheoTrade. I think you guys will absolutely love what we're doing here. Again, please join us, theotrade.com/IN. I'm Don Kaufman. I want to have everybody again wish you guys a wonderful evening. Thanks a lot, everybody. Bye-bye.